Hello traders, you're welcome to this video. In this video we are going to be looking at uh, a powerful strategy called the 50 pips a day forex strategy. Okay, so we're just going to be looking at the key principles behind the strategy along with tips on trade execution, risk management, market analysis, and identifying entry and exit points. So briefly we're just going to be breaking down this strategy, okay, and how it works. All right, so first of all, this strategy is a strategy that you would want to use on major currency pairs, okay? Major currency pairs like the Euro USD, like the GBP USD, like the USD JPY, and the rest, as they typically have higher liquidity and tighter spreads, okay? Now, this makes it easier to achieve your target of 50 pips, right? And then use a reliable trading time frame. For example, we can use the 15 minutes time frame or the 1 hour time frame. Either of these time frames are popular time frames that traders use for this strategy. Okay, well, we're just gonna be using the 15 minutes time frame in this video. Now they offer a balance between capturing small price movements and not getting overwhelmed by noise. Okay, now when you want to use this strategy, you have to identify the trend. It's very important. Trade in the direction of the overall market trend. Use tools like moving averages or trend lines to determine whether you should be looking for buy or sell signals. So we're going to be plotting trend lines because trend lines are really helpful. They help us identify the direction of the trend. Like we can see, this is obviously a bearish trend. As we can see, price bouncing off the trend line and moving downwards. So once we have identified the trend, then we have to set clear trade rules. Okay, define your entry and exit criteria before placing a trade. This could include specific price levels, candlestick patterns, or indicators. Okay, and then you can use limit orders. Right after we have identified the direction of the trend, we need to set our rules. Now the 50 pips a day strategy is a strategy that's quite broad because it gives room for you to bring in your own strategy. The main thing about this strategy is that you are targeting 50 pips in a day. Now how you achieve that 50 pips can be dependent on you because you are the one to set your rules. Okay, but then irrespective of the strategy you are using, some things should remain constant, such as risk management, such as your psychology, managing your emotions and all of that. Some of those generic things remain constant, but then your strategy would be dependent on you. Okay, so you have to set your rules, you have to set your clear entry and exit points. But I'm just going to be giving an example in this video. For example, we can be using candlestick and chart patterns. Okay, so in this particular video we're going to be using trading in the direction of the trend. Okay, some people might decide to scalp, but we're going to be trading in the direction of the trend. Okay, so having observed the direction of the trend, we have to watch out for pullbacks and then we trade the continuation of the trend, right? So now, because this is a volatile pair, it's a pair with high liquidity, we will notice that from here to here, you can see from that point to this point already gave us about 46 pips. As you can see here, already gave us about 46 pips. So since we are trading on the 15 minutes time frame, we can enter two trades and we've got our 50 pips already. So when we want to trade in the direction of the trend, once we notice a bounce off from the trend line resistance, we can decide to enter a sell and then set a stop loss right above the swing high, and then we can target near close resistance levels, support levels. We can target support levels for exit points. For example, this is an exit point. We can see, let us move back a bit. We can see that the previous time the price got towards that level, we can use that previous time as our support. So we can see that this would have been a good place to exit. So had it been we had entered around here and exited around here, we would have caught about 34 pips. In fact, let's just call it 30 pips. Let's say we entered a little bit late, we would have caught about 30 pips, right? About 30 pips. Now we just need to wait for price to get back to the trend line, and then we enter another buy after we confirm with perhaps a candlestick pattern. Like for example, we can see this candlestick pattern, this bearish candlestick pattern with a long wick above, right? Would have entered another sell and then would have exited at the support level again. We caught about 9 pips, that's giving us about I'm sorry, this is yeah, this is 9 pips. So we already had about 30 pips plus 9 pips, that's like 39 pips, right? Okay, now we would have entered another sell after price got to the trend line. We would have set stop loss above the swing high. We can see that the previous swing high was this, right? We have set our stop loss above it, although the price got to the close to the stop loss, but it did not hit the stop loss. And then we would have exited the sell again around the support. This is about, you see, this is about 10 pips. Okay, this is about 10 pips, right? Okay, so this three trades should have given us our 50 pips already, because at this point we would have entered somewhere around here. I just adjusted the support level because I noticed that the point of rejection is actually lower than where I set the line. As we can see, the point of rejection here, we can see, in fact, I can still even take it lower because the point of rejection is actually lower. We can see it for ourselves. You can see rejection here, you can see rejection here. But using this now, we can see rejection here. So we would have even caught more than that 9 pips that I had calculated. See, we would have caught about 12 pips for this, and we would have caught somewhere about 11 pips for this. So we would have gotten our 30 plus 12 plus 11. We would have gotten our 50 pips already, trading in the direction of the trend. Okay, now if you are a scalper, obviously, as trading on the 15 minutes time frame, it means you are a scalper. You want to be making sure that you exit your trades quickly. You enter quickly and you exit quickly, so that you can be able to catch more number of pips and get to your 50 pips target on time. Okay, because if you continue to enter trades in the direction of the trend, a point might come where we're going to have a breakout. And for example, let's say although in this case the price broke out of the support and continued downwards, which would have been a continuous win. But had it been there was a situation whereby price broke out upwards from this trend line resistance, then price would have hit our stop loss. So when you are trading with this strategy, try as much as possible to be capturing shorter price movements so that you don't end up turning a winning trade into a losing trade. Okay, and use good risk to reward ratio. You can aim for 1 to 2 risk to reward ratio. Okay, this means that for every pip you risk, you should aim to make at least 2 pips. For example, if you set a stop loss of 25 pips, you can target a take profit of at least 50 pips. This is a 50 pip strategy. So that, like I said, that the way you make the 50 pips is going to be dependent on you. Okay, so if you want to scalp out the 50 pips, that's fine. If you also want to use one single trade to capture your 50 pips, that's also fine. For example, you can decide to go on the 1 hour time frame so that you don't scalp. If you go on the 1 hour time frame, you can look for a good opportunity. For example, now in the direction of the trend, we can see that we would have, this is a support level, right? Would have just calculated. Remember that if you are risking 25 pips, you want to target at least 50 pips, right? So we can see that this gives us about 46 pips to make 46 pips, risking about 23 to make 46. Okay, that's actually 1 to 2. If we reach 22 pips to make 44 pips, that is a good one. So had it been we had entered this trade, although it didn't give us 50 pips, it means we'll have to look for another opportunity to get our 50 pips, or would have just waited for another opportunity. All right, so now we can see that the trend actually continued. So as the trend continued, perhaps we would have considered entering a sell at this point, right? And then we set our stop loss above the previous swing high, because this is the previous swing high, and we had that at about 24 pips. And then I'll take profit at the nearest support zone, and the nearest support zone is still giving us somewhere around 43 pips. Okay, so if we wanted to open more than one trade, then we would have entered this first one, because the risk to reward ratio was good. We would have entered this first, after this first pullback, and caught about 40 something pips, and the second one we can just target about 10 pips to complete our 50 pips, and we are good to go. Okay, so you don't even need to open multiple trades for you to capture your 50 pips. Okay, And when you are trading with this strategy, try as much as possible not to risk more than 1 to 2% of your trading capital on any single trade, as this will help you to stay in the game longer and manage drawdowns effectively. Okay, and it's very important for you to use technical indicators such as the moving averages. You can use moving averages, you can use the MACD, the RSI, you can use other indicators basically just for additional confirmation, right? Just for additional confirmation. And then keep an eye on economic news events, news releases, and any events whatsoever that can affect the price movements of the asset. Okay. All right. So basically the 50 pips a day strategy is all about consistency, discipline, and sound money management. By adhering to these principles, you can build a sustainable trading approach that allows you to capture daily profits effectively. Always remember to keep learning and adjusting your strategy based on market conditions. I hope you found this video insightful. Kindly like and subscribe for more trading insights. Thanks for watching. Happy trading.